if I had a gun to my head, I would tell you that gold is being reintegrated into the financial system, into the monetary system. Let's go back several years to 2017 and move forward. In 2017, we see out of nowhere the German Bundesbank, who evidently for 4 years prior had been asking the Federal Reserve to send them back their gold. And it had taken so long, they finally got aggravated, put an article in the Wall Street Journal, made a big deal about it, and said, more or less, send us back our damn gold. And we did, eventually, some of it. They're asking for the rest of it now, majority of it now, and I don't blame them. Evidently, some of the bars we sent them had different serial numbers than the bars that were sent to them, or that they sent to us originally. But what got interesting to me was that if you go back to 2011, from 2011 to 2017, the central banks and everyone was selling gold. It had gone from a high of 1,900 and had fallen several hundreds of dollars down to I don't know, maybe $1,000 an ounce or whatnot. And gold had fallen out of favor. The S&P and the Dow were roaring. Bitcoin was roaring. And here you have the Bundesbank making a big deal about getting their gold back. That same year, the Bank of Austria, Hungary, Turkey, Poland, the Czech National Bank, the Dutch National Bank, many of these Eastern European banks did the exact same thing. Right after the Bundesbank did, they said to not only the New York Federal Reserve, but the Bank of England, give us back our gold, please. Now, really for many, many years, really, you could go back to the end of World War II, the gold was either, most of the gold was held in the New York Federal Reserve because of safety, Western jurisdiction, Western rule of law, and the safety that it presented. But more recently, it was held at these two locations in England to give direct access to trading at the LBMA and also to the COMEX in New York. So it would be held by the Bank of England. It would be held by the New York Federal Reserve safely, and then they could trade it quickly, seamlessly on the two major hubs for price setting and liquidity. And they said, give us back our gold. Now, this was supremely interesting because no one was buying gold. In fact, the central banks had been net sellers of gold. In 2018, the following year, those same banks that requested all their gold bought more gold as a group together than they did in the previous 60 years combined. Now I start getting really interested. I'm talking in seminars about this. I'm speaking at it at conferences. In 2019, those same banks doubled the amount they bought the previous year. 100% increase. And now things are really getting crazy. And then out of nowhere, maybe it's just coincidence or not, the Bank of International Settlements, the most well-informed bank on the planet, the most powerful bank on the planet, the central bank, and this is the key to so much of what is happening now, reclassified gold as the world's only other tier one reserve asset. Since the end of World War II, there's been basically one tier one reserve by central bank standards, US dollars / US treasuries. And all of a sudden, the BIS reclassifies gold from tier 3, where only 50% is calculated on your balance sheet, to tier 1, the only other tier 1. So all of these central banks, I believe, were told by the BIS in 2017, start bringing your gold home, start buying it. Things are going to happen with gold. And we have seen over the last 4 or 5 years, 5 years now, those central banks buying more every single year, to the point where what is driving the price of gold, or has driven the price of gold really since 2019 or 2018, has been massive central bank buying. That's where everything starts. Now, you go back my entire career, I've been doing this for 35 years, I can think of maybe 1 year, maybe 2, where there was any form of net imports of gold to the United States. The United States is traditionally a net exporter of gold. They did import some, I think, in 2011 and some in 2020 when everyone thought the world was coming to an end. Not a lot. But since November, since Trump won the election, the United States has become a massive importer of gold. I'm talking more gold has been imported since January of this year than has been since World War II, when everyone sent us their gold. So wow. This is a big deal. Gold is the only other tier 1 reserve asset, and it is being massively accumulated by the traders who are the most well-funded and more importantly, the most well-informed, not only massively accumulated, but repatriated from
We don't wish to leave it with you. We understand that that's where we obtain liquidity, but we prefer to keep it at home. Thank you very much. So, we move ahead to where we are right now. We're a net buyer of gold, the only other Tier 1 asset on the globe. We hear members of the Bundesbank in Germany stating, gold ought to be revalued. On every central bank balance sheet throughout the Western world, gold is still assessed at the old Bretton Woods rate of $35 an ounce. In the United States, it's $42.22, and I'll clarify that in a minute. But you have members of the Bundesbank saying we need to revalue gold to counterbalance the liabilities in our balance sheet. Even simply marking it to market will deliver a tremendous amount of liquidity into our reserves that will enable us to normalize our balance sheet. You have the head of the Dutch National Bank, who's been shouting this for a while. You have Senator Cynthia Lummis from Wyoming, who is discussing, here in the United States, gold ought to be revalued in the gold revaluation account. You can't invent it. In order to supply enough liquidity to allocate some of it to purchase Bitcoin for the strategic Bitcoin account. So, you have all of these actors talking about revaluing gold. You have Judy Shelton, and many people believe she'll replace Powell this time. I think there's a very good likelihood she will. But she told me, listen, and the entire premise of her book is that who the hell wants to acquire U.S. Treasuries that have been weaponized and are being inflated, have default risk, have inflation risk, have all kinds of risk, where net, since 2014, there's been no new central bank acquisition of U.S. Treasuries primarily. Now, there have been central banks that purchase Treasuries, but there has been more net selling than net purchasing. And so, net, central banks have been net liquidators of our Treasuries. And why would you wish to hold Treasuries in a nation that is almost $200 trillion in debt? Yeah, 36 on the balance sheet, but Medicare and Medicaid and Social Security, government, military, pensions surpass $175 trillion. We're almost $200 trillion in debt. And $1 trillion is a long time ago, or a lot. And if we discuss it in terms of seconds, 31,688 years ago was 1 trillion seconds. So you're referring to figures that are so enormous people can't grasp them. We're $200 trillion in debt, yet we've outsourced all of our manufacturing. We don't create anything anymore other than basically financial services. So it's a circumstance where we're so far down the rabbit hole. Why would anyone wish to give us their goods, like the Saudis as an illustration? Why would they want to extract oil out of the earth with energy and labor only to trade it to us for dollars that we can generate out of thin air and then recycle? Part of the petrodollar agreement was to recycle the excess into U.S. Treasuries, while the Federal Reserve can print money to acquire Treasuries. Well, that doesn't appear very moral. If you can do it just like that, why would they hand us their oil for dollars that we can create from nothing, and then Treasuries, which we can obtain with money we created from nothing? Well, truly they don't. And much of the BRICS nations, much of the countries in Asia and in the Middle East are saying, there are superior alternatives. So instead, if gold is now the only other Tier 1 reserve asset, well, what we have been witnessing is countries dumping Treasuries and acquiring gold, the only other Tier 1. For 25 years, since 2000, gold has doubled the performance of the 10-year Treasury. No counterparty risk. It can't be sanctioned, can't be seized like we did with the Russian assets, 5 billion of them. In effect, we defaulted on Russia. And who are we? We're a nation, and again, I'm proud to be an American. I'm a patriot, right? But we invaded Iraq 21 years ago, and we're still there today. We went there under the pretext of weapons of mass destruction. Sorry, we didn't locate them. We ruined your country, overturned your regime, but we're sorry. And we're sanctioning 14 of your banks for having the boldness to trade with Iran to purchase liquid natural gas. We know you're overheating to death in the summer, and you need to cool your homes, but you can't trade with them, so we're going to sanction your banks. And by the way, the $90 million or billion dollars, $90 billion, that you generated in oil revenue in 2023, well, we're going to keep it here at the Federal Reserve because you're not permitted to control your own natural resource revenue. They asked us at the end of 23 into 24, can we have $1 billion, please? And we said, no, we'll deliver it to you next year. So what we are noticing is Iraq, as an example, expelling Western coalition forces. They've eliminated all dollars in all of their banks. There are no green dollars anymore. The globe is exhausted of this. They're sick of being bullied. They're tired of the hegemony. They're tired of all of this stuff. So they're aligning under a shared thread. So combine all of this. The BRICS nations are the ones that have been acquiring all the gold, producing all of the gold. The European countries in the East, Eastern European countries, comprehend what's occurring. They want all their gold returned. They're purchasing gold. You have members of various central banks and senators here in the United States urging to revalue gold held in the revaluation account. You have Judy Shelton telling me Trump will issue gold-backed treasuries on July 4th, 2026. We become a net buyer of the only other Tier 1 reserve asset on the planet. Yeah, you combine all this, you begin to recognize something is forming. And when we discuss the tariffs, it's nonsense. There's something called Triffin's dilemma, and the White House understands this. They've written about this. They've documented this, talking about the issues lately of being the world reserve currency. Triffin's dilemma is an economic theory that basically states, if you are the reserve currency, you will always run trade deficits because the world requires more dollars than you could ever sell goods in order to create you could never export enough to deliver the dollars to the rest of the world. You have to generate more dollars and export dollars. In effect, is what it's indicating. There are more dollars required than we could ever produce solely through commerce. And so you will always run a trade deficit. They understand this. If you're the world reserve currency, you will run trade deficits. Period. So these tariffs are not tariffs. They're sanctions disguised as tariffs. So we merge it all together. What's transpiring with gold? I genuinely do believe that gold is being reintroduced into the monetary framework. It is going to either support treasuries or perhaps it even supports M1, which is about 2.5 trillion. M1 is the currency in circulation. When you go back to 33 and earlier, when the U.S. backed gold or currency was backed by gold, it was just M1. M2 is about 92% credit, 8% treasury notes. That credit would be like what you observe when you log onto your bank account. That's a promise to pay treasury notes. But until you do it, it's just credit. And so that is on M2. M1. If we were to divide the quantity of gold supposedly held by the Federal Reserve on behalf of the U.S. Treasury, you divide that figure, the 8,300 metric tons, you divide that into the money supply of M1, you obtain about $9.50 an ounce.